morning. This is Ken Long from Tortoise Capital with a quiz from our chat room from April 25th, 2017, the day after the market responded to the results of the French election. We're looking at XIV, the inverse volatility ETF, one of our favorite trading targets. There was an over 7% gap up and about an additional 5 or 6% follow through to this point where we are in a sideways quiet channel and looking at nearly 14% gain with about 75 minutes remaining in the session and decisions to make about how to respond to this unusually large gain in a short period of time. And so our quiz is to frame the situation using all our various techniques in order to gain an understanding and an appreciation of the situation, to develop some courses of action, and then select ones based on our personal risk tolerance and desire for rewards. In other words, are you buying, selling, or holding? If you don't exit, where would you place your stops and why? And what is your implementation plan for today? And then looking forward into the next day. What will follow is just one solution among many possible ones, and then we'll look at some follow through, and then the next day see what that does to our insights. All right, so this is my solution. First thing that I consider is that after 2 days of outside gains, my primary concern was preserving those gains and not so much expecting another leg up today. My concern is that the VWAP magnet trade here, where we would move from 75 and a quarter down to 74 and a quarter, would erase all of these grinding gains, and then with the next target putting us at risk of a closure of the gap down to 73 and a quarter. So now I'm looking at a potential $2 loss in the next 75 minutes, and that's well within the range stat for a ordinary move on XIV. It is so volatile. And so to me, the Z3P, that the Z3 lines have pinched within less than a frog box. This looked like a way to lock in a price of around 75 after nearly a 15% gain in 2 days. Just notice that during the day, these yellow dots are tactical trading moments, which was how we had taken our swing trade that we were holding from the previous day and added positions and sold positions at various times as these signals come online, which allowed us to be turbo, or larger size intraday, which resulted in some nice intraday gains to supplement the swing trade. So there were some tactical reasons to want to preserve these moves. These aren't 14% gains, but they are intraday positions, or intraday trades that give us additional capital to preserve. But the nature of this trade was not a runaway move at all. The previous day was a runaway move. And these look like nibbles and tactical trading. And it was not the kind of a runaway day to the upside that would lead me to believe there's a lot more. It's like I think folks were concerned by the gap in the previous moves, so that this was not a trade anybody wanted to chase. So that reinforced my belief that if there was going to be a sharp move downward was more likely. Now the follow through looks like this. We get after the Z3P and targeting the VWAP. In fact, that move occurred. You see a return to the VWAP almost immediately, and now we set up a reverse trade back to the declining RL270 if we so desire, and you can see that already starting to move with a higher low that's actually tradable in here. Now showing a slightly more expanded follow through. So this was the blue line where we examined the Z3P decision and the VWAP, and that was yesterday's close, this dotted line for perspective. And so the VWAP magnet trade happens after the Z3 pinch. Next thing, notice number 2 is that the RL270, which had been up but then starting to lose steam, rolls over and starts to decay as price sells off and is grinding back. And then they meet on this RL270 rebound trade here. It gets back to that declining 270. So a lot of times when we see this downward move, I like using that RL270 as a estimate of forward fair value. And because it doesn't move that sharply, you can project that line to get some sense of how far it could go in available time. And so this next blue line is the close of the day. And then just notice what happens in the after hours market. First of all, the VWAP hardly moves in the after hours because there's such little volume compared to the intraday volume. And the RL270 continues to decay as price comes back off the 270 back down to the VWAP where it stabilizes. And then finally the RL270 and the VWAP meet like they're supposed to back at fair value, and there's really not much difference between this price and that price. This difference between the VWAP and the RL270 excursion turns out to be the amount of distance that traders of all time frames can actually move the price, which shows an interesting insight here that the maximum divergence from the VWAP and the RL270 occurred right at that Z3P when all of the buying interest just dried up and the sellers hadn't taken over yet. So Z3P turns out to be a very important moment to study, and that's 30 minutes of time frame in here for us to recognize that the state of nature has changed and that we need to be prepared for the next leg. And again, just as a reminder, that's what it looked like on the front end of that. That's where that vertical blue line would be, and that's the VWAP trade that we're concerned against. We're concerned about protecting against. Now, what this day after chart shows is a 30-minute view of XIV. So we're like 30 times we've zoomed out. Instead of 1 minute active, we're looking at 30-minute operation. And from blue line to blue line is a day. So the day of the quiz that we just looked at, that was the blue dot was the decision about whether or not to protect the price of 75 against that possible VWAP trade. And then the VWAP trade and the reversal back to the RL270, and then finally the meeting after market hours occurs in this what only looks like a noise blip. That's the actual VWAP retracement trade right here. And you can see how insignificant that noise looks like on 30 minutes, whereas in the tactical frame, that was a significant move that was actually tradable in both directions. So a 30-minute trade, or 30-minute view, this operational view, and gives us a chance to look at multiple days. So here's 1, 2, 3, almost 4 days. You get a bird's eye view of what's going on. You can see this is that 7% gap on the day prior to this was about a 2% gap. This was a 7% gap, and then this becomes the value add of the next 2 days of follow-through, which culminated in a declining rise in price. It no longer was resuming. It looked like it was muddling through and felt full and satisfied at this point. And so now the concern is, as I look at the day after, I'm really actually satisfied with the results of that locking in 75, because the weakness that we saw in the rest of that day was reflected in 1, 2, 3 tests of the downside. Now those are moves that now come back to the Bollinger Band mean on the 30-minute chart and beyond, and so now the downside targets are looking at Z2, Z3. Z3 is important because now if price fails below here, I certainly feel like I have to be short from here, because the next support is not even down here until we get to the close. So that move from 71 to 66 could happen lickety split. So now the real question is whether or not we should be short in here at the yellow dot in order to play the potential move to test support at 71. And if that fails, we could then think, if we were able to trade that and had markets money in hand intraday, we could then take the swing position, add to it, and have a double scoop moving to this spot. Now, if we get a move past RL 270, which is the fair value for the long-term holders compared to the 30 minutes, they're looking at fair value at 67. So if it overshot and came down to this support level, or the previous RL 270 and really the VWAP, this is where, on the swing basis, I'd be looking at a second position at 65. So we can use the tactical trading to lock in some gains, and then this operational view to get some ideas of what's happening on the shorter term swings. And this combination of tactical and operational now allows us to connect back to the strategic view of market conditions, risk Z, and what's going on overall. And all of this analysis and tactical situational trading driven by the opportunity and emotion that was built into a 7% gap up, and then almost an additional 7% follow through up into here. So this was a insight into core and turbo, into trade framing at the tactical and operational level, how the two can support each other, and a way that we can gain situational awareness by interpreting the different indicators we use that are fractal in nature. So thanks for your kind attention.